Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and our toll-free number, 800-951-0592. The website at allamericangold.com, and I'm still battling this head-throat thing, but the show must go on, and yesterday, once again, I was made to look like the fool. And I even said it yesterday. Congratulations, by the way. All of you that took advantage of the sale yesterday. It got all the way down to like 2050 on 20s as gold. Like I said, I thought, no way, gold's rallying. But every time I think that, it always goes the other way. And that's exactly what happened. And it was so funny as I was listening to Jay Powell talking, because this was the Fed meeting, and all these headlines were popping up about him getting talking tough and this, and I'm like, what are they talking about? He didn't say anything remotely that I thought was tough talk, but nonetheless, we'll break it all down for you today. I'm joined today. Jason is on assignment. We've got Jason doing some other things for us today. So his partner on Faking the Truth, Brian with a Y. Brian is joining us today. Brian, good morning. I know, you're normally not the morning guy, so thank you for taking time out and being with me today.
Joe, I don't think Brian is quite here yet.
Oh, he's not even there yet. Was he? He's not a morning guy. So, thank you, Jack. By the way, that was Jack. Jack runs the boards for us in Colorado. The guy is an absolute wizard. While we're waiting for Brian, I'm going to get right to it. Listen, we have the biggest silver sale since COVID happening right now. So, in dimes and quarters, there was a liquidation that came through yesterday. Right now, silver is down $1.20. At 22.60, and we'll talk about why that is in a minute, but I want everyone to know this is the cheapest silver, especially U.S. minted silver anywhere. I've got quarters. I've got about 500 rolls of quarters at $210 a roll. That's $30 a roll off. Dimes, I've got about 500 rolls of dimes. Those are going to be at $105. So when you look at it, the quarters, $10 face values. So there's 40 silver quarters. It's kind of funny when you think about it. The United States, the dimes, quarters, and $50 used to have silver in them all the way up until 1964. Well, through 1964 up until 1965, and then the government figured out, hey, wait a minute, the silver's way too valuable. Don't do that anymore. So a roll of silver quarters has 7.15 ounces of silver in it. The dimes would have half of that. So the dimes are $5 rolls, 50 dimes in a roll. Just kind of like today, and I don't even know, do people do that anymore? Do they roll their quarters and dimes anymore? I think most people just put their spare change in the middle console of their car and forget about it. But that's how these come the same way. And I'll just give you the cost per ounce here. It's $29.37. So it's the first time in a very, very long time to see silver under $30 an ounce, especially U.S. minted silver. So these are the dimes and the quarters at 210 and 105 as both gold went down to support. So we were hoping yesterday, remember, as the show was going on, we were at that 1830 level, and I was hoping, hey, we're going to hold that. That would have been a new higher low. We had hit a higher high on both gold and silver this week. That did not hold, so gold went back to $17.95. Silver went all the way back to $22.50. So back to the I guess, the previous higher lows. So this is a great buying opportunity as everybody, and I don't really know or understand and don't need to. The Dow was down big yesterday after Jay Powell talked it again. I don't know why. He didn't say anything really worthwhile. The biggest thing he kept saying was, we haven't talked about it. We haven't talked about that. And because people were asking him, hey, are you going to raise rates in March? Are you going to raise rates by more than a quarter of a basis point? Are you going to taper? And it blew my mind as he answered, well, we haven't talked about that yet. And I felt like, wait a minute, you just had a 2-day meeting. What the heck did you talk about? I mean, really, you would think that would be all they talked about. And I think that it is. I think they're going to end taper next month. I expect them to raise rates in March, and then I expect them to wait. That's just my opinion. I think Jay Powell and the Federal Reserve delivered exactly what Wall Street wanted. As a matter of fact, today Wall Street's up almost 500 points today, so it's a very interesting marketplace. We have earnings out. McDonald's blaming earnings misses on elevated costs. When we get back, we're going to talk about what else is going to get more expensive. Like I said, this inflation thing, it is not stopping. Patriot Radio News Hour. We'll be back after the break. Hey, we're back here. Patriot Radio News Hour, 800-951-0592. Silver dimes in quarters, red hot. I looked pretty much everywhere. Most places are out of stock, but this is the cheapest price in the country right now. Rolls of silver quarters at $210. Rolls of silver dimes at $105 at 800-951-0592. And I know Brian's with us now, and Brian, thank you for joining me. Little sluggish as we get going here this morning, but a huge opportunity, because that's really what it is in the gold and silver markets. As once again, listen, I know they want to believe that Jay Powell has this thing under control, but we know, listen, he's already proven that he doesn't. The fact of the matter is, he didn't say anything yesterday that everybody didn't know before yesterday, which is, okay, yep, taper's going to end, they're going to raise rates in March. The funny part of what he said was everything else. Well, why we really haven't discussed anything. And Brian, I'm just wondering when it is that a lot of people are finally going to wake up and realize we got big problems ahead of us because the cost of everything is skyrocketing.
Well, it sure is, Joe, and good morning. Thanks for having me on with you. I just popped up a Zero Hedge article, and it says, welcome to Fed's Troika, and jumping down to a spot, as someone replied, to paraphrase that old Soviet joke, they pretend to have inflation under control. Here's the kicker, and markets pretend to believe them. Nothing like double the pretend factor.
Listen, this is, well, and again, that's and it is until it isn't. But just to give it an example, breakfast is going to get really expensive. Milk, the price of milk, now shattering records as milk inventory. Once again, these milk inventories at all-time record lows. There's a major freeze supposed to, I guess, going to hit Florida. Orange juice, which was already skyrocketing, is going to take another huge hit. Butter, cheese, eggs, all of these things are expected to hit new all-time highs. And again, this just tells you how far, like I said, I like how Brian said it. Hey, the Fed can pretend all they want. And yesterday was the big pretend day. Matter of fact, anybody that actually listened, it should have scared the crap out of you. Because either one of two things. Either the guy's just flat out lying, which is what I think. Right? I mean, I would love, as Jay Powell was giving his testimony, if we could have had him like on Maury Povich with the lie detector test. because I can't believe for 1 minute they haven't discussed raising rates more than a quarter of a point, that they haven't discussed tapering off of their balance sheets. But this is he couldn't come out, because if he had come out and said it, right, that would have upset Wall Street.
Yeah, no kidding, Joe. I think so many people, and our listeners excluded, just are lulled into a false sense of, I got the items off the shelf yesterday, so they'll be there tomorrow. I don't have to worry about it. But boy, the precarious balance with supply chain, with markets, I think it's complicated. It's too complicated for me to understand. But I think most people are just lulled into a false sense of it's going to be there tomorrow because it was there yesterday. And I think things couldn't be further from the truth.
Yeah, and you're right as far as what's going to be there. That was the other thing. The supply issues have lasted longer than he thought they were going to be, and I don't know why he would have thought they weren't. I was saying from the get-go, that's a lie. That's not true. How about yesterday? The Commerce Department, and actually, I'm sorry, this was Tuesday, said that the supply of U.S. computer chips, well, I guess the U.S. supply of computer chips, right, because most of our chips aren't made here. Arizona, believe it or not, we make a lot of chips here. We have a big, I think it's Intel down in Chandler. They're building a plant up near Anthem that I'm hoping will open, whether it's late 2022 or early 2023. But they're saying that the supply is now at an alarmingly low level. So it's actually gotten worse. According to the Commerce Department, the United States on average would have about a 40-day supply of semiconductors. Okay, those are the chips. And let's face it, everything we buy now has chips in it, right? You're from your coffee maker to your blender to your cell phone to your laptops. I mean, you name it, your automobiles, right? Everything's got a chip in it.
Your dogs.
They're now saying, Brian, they have less than 5 days of supply.
Wow. Well, and then you look at that terrible incident. I think it was a Los Angeles rail yard with all that cardboard strewn everywhere, where the Amazon raiders came in. So even when the supply chains are somewhat functioning, you get is that called a black swan event? You get a raiding party.
Well, you know what's so funny? I'm so glad you brought that up, because I've been meaning to talk about. Obviously, I think everybody's seen the pictures, and you're like, how can that happen? How could that even be possible? Just so you know, the railroads kind of operate a little differently, and it's kind of interesting. They have their own, I'll call it police force. The railroad companies do, and usually they handle theft and all that on their own, and you don't normally have a lot of either city or the sheriffs or the state police involved in the railroads.
Is that Pinkerton still? Does Pinkerton's handle that?
Yeah, right. Well, kind of funny, kind of maybe a leftover from the Wild West days, right? The Pinkertons got laid off by the railroad companies in late 2020. They eliminated a lot, and I mean a lot, of their own security, and coincidentally, about 2 months after that, the theft started to go up. Now, of course, it's at these exploded levels, but it's not all to be blamed on. I know, because my initial reaction is, where the heck is law enforcement?
Yeah.
And then, of course, it got brought to my attention after a little more digging. right? Like everything else, the railroad companies, they're trying to keep costs down like everybody else. And, Brian, I think they made the wrong choice as far as who they were going to lay off.
Yeah, clearly. I mean, you don't need them until all of a sudden you do need them.
Right? I mean, think about it. Oh, wait a minute. I wonder what genius, sitting there on the board, because they had the big meeting, right? And they're sitting there, and it's COVID, so they're probably all on their teleprompter computer screens, having their big Zoom meeting. I wonder what genius vice president suggested that one.
Well, exactly. From the luxury of their ivory tower, and I had an uncle that used to be an engineer for I want to say it was Burlington Northern when we lived out in Eastern Sterling, and the spots that I remember, they were like a no man's land usually, and the only defense that the train had going for it was momentum, that it was in motion. But when the train stops, you got a couple engineers on that huge line. Maybe an engineer in the caboose, and that's about it. If you don't have security, and I get it, all the hours and hours and hours of security that's not really doing a whole lot, and then boom, all of a sudden, yeah. But good question. Something tells me they weren't thinking about anything beyond what they're accustomed to in their environment.
Well, let me tell you, I'll be honest with you, I didn't even know that was a thing anymore. Right? Who robs the railroad? Right? I didn't even know that still existed. But apparently, listen, hey, robbers, thieves, whatever you want to call them, they're smart. If they would I just think man, if you just put that energy towards positive stuff, right? But they figured out, they know exactly which cars to go into. I mean, they have it down. And the second, it didn't take them long to realize, hey, wait a minute, where's the railroad security guys, right? And now it's just turned into a giant free for all. I think it was, but there was a little more to it. So yes, everything's more expensive. Yes, nobody wants to prosecute. That apparently. Prosecutors out there didn't actually believe theft was an issue in America. Believe me, it is. Just ask Walgreens or CVS or the supermarkets or anybody that's in retail. They'll tell you it is. Yes, that had stuff to do with it, but the railroads, they helped as well. So I don't want people to just blame California for not wanting to punish people that steal. It was kind of these perfect storms we keep talking about how the government just makes things worse. Well, this was the same thing. While they were lowering prosecuting of theft, at the same time the railroads decided to get rid of their police. So
a perfect combination, and how many
I wonder what's going to happen. Right?
Right? Yeah.
I'm shocked. I can't believe it. Wow, man. Why did this start happening? Well, there you go. Now you know who was it? Paul Harvey. Now you know the rest of the story, right? Yeah, it's always the rest. By the way, we had economic data out. We had some really good data out. It's some really bad economic data out. Let's start with the good. The good was fourth quarter GDP. Now, this number was already going to be a good number. And it had more to do with not necessarily economy. This was more like bookkeeping. This was going to be a quarter because of inventories. There was going to be this was going to be a good number. Everybody was expecting GDP to be close to 6%. And most of it was, I'll call it paper GDP gains. And it works both ways. As an example, last quarter, GDP was only 2%. So there was going to be a good number. This number actually was even better than it. Came in at 6.9. Again, though, most of it was fluff, but still a good number, Brian.
Oh, sorry. I was going back through my notes, just looking at the last time we had rolls of quarters and dimes. Sorry, I was halfway listening to what you were saying.
Oh yeah, well, the GDP number. So think about this: the Fed said inflation was 7, and lo and behold, GDP came in at 6.9. So it was a push. But here's the problem with that good number: next quarter's number is not going to be a good number, and to that point, the rest of the economic data was not good today. So we had good GDP in Wall Street. Oh, that's why we're all excited. But we had durable goods. And by the way, so the GDP number, that was an old number, right? That's last year's number. Durable goods, which is already for the first quarter, was really bad. And when we get back, we're going to talk jobless claims. Why are they getting more elevated? We'll talk about that next. Hey, we're back. Rolls of silver quarters and silver dimes. This is the cheapest price in 2 years. Just incredible. I checked the usual cheaper online places. This is the cheapest price I could find in the country right now. Rolls of silver quarters, $210. Just to give you an idea, the price, our regular price, was going to be $240. And so to be at $210, that's just incredible. The dimes from $120 down to $105. Just add as many as you can, because this is it's ridiculous, but it's okay. It is what it is. Listen, let's buy for less. Just to give you an idea, so this GDP number, which, man, they're so happy about, 6.9%. And, of course, I told you it was a lot of fluff. Just to tell you how much fluff it was, inventories added 4.9% to headline growth. So if you take that out, it's like, wait, so GDP was 2%, right? And it gives you, during Christmas, and of course, the shelves are empty, so I don't know what inventory was. Now, in the order, and I only can go by what they say, right? They say that it was motor vehicle dealers. So I don't know if maybe the new model finally got to the showrooms. I know here in Arizona, you drive by car dealers, they don't got any cars. There's no cars. But that's what the number was. That's what the number said. So it really wasn't that great of a number. And quite honestly, I knew that inventories would add a lot. I didn't know it was going to be that big, Brian. And then the reason didn't make sense to me either. Motor vehicle, really? Maybe it was RVs. I don't know.
Well, first of all, Joe, I don't know how you keep track of all the different metrics, all the different numbers, but it sure does seem like to me that it's a great advantage to those that want to tell the tale when they can just cherry pick the ones that paint the picture. It seems awfully convenient to.
Yeah, listen.
Yeah.
It's the same thing. Like I'll give you I'll cherry pick the other side of it, right? Because the cheerleader squad, as I like to refer to them, and again, the fact that at a GDP of almost 7%, what the hell was the Fed doing? It's actually not a good thing. When it gets to that type of level, that means the Fed is already way behind the curve. And of course, a lot of it too, as you know, the pricing. So if you think about, and maybe this was it, all the new cars and, hey, these prices are a lot more. So it added a lot more to it when you looked at inventories. Because hey, the price of a new car, this year from last year, well, it's $10,000, $20,000, $30,000 more. So it may not necessarily be that there was more vehicles. It may just have to be, hey, it's how much they're worth now. because the Fed is so behind the curve. It's actually not a great thing. 3%, 4% GDP, that's kind of anything above that gets to be dangerous. And so it fits and it doesn't fit all at the same time. But on the bad side, durable goods down 0.9%. They're now saying durable goods fell to the lowest since April of 2020. So that was really, when you think about COVID, that's about when COVID started. Late March, mid to late March is when COVID started. So that wasn't a good number. Pending home sales, that was a horrible number. And I get it, right? Because interest rates are rising. It's going to be very interesting what happens in the home buying market as this whole thing plays out. And then the other number was jobless claims. Remember last week we had a number that jumped. That number got revised higher to 290,000. This week it was still in the 260s. And if you remember, before the year rolled over, we were having jobless claims like at 200,000. So once again, it just seems like the economy is slowing, and at the same time, Jay Powell is going to be raising rates, which historically is not a good combination, Brian.
Unfortunately, Joe, it sounds like more and more perfect makings for war to be a nice, convenient distraction, and I really hope not. I hope that's not the case.
Boy, I agree with you. This is there's going to need to be a distraction soon because it's really not an ideal situation. Food stamp numbers. Let's talk about that for a minute because that number came back out. We had gotten back down below 38 million people on food stamps. That's has now gone back up, and these numbers are still a little older. So this is a fiscal 2021 number. 41.5 million Americans back on food stamps for the Department of Agriculture. That figure represents about 12% of the United States population, Brian. But this was a number that jumped by about 3 million people in 2021 when, allegedly we have all these jobs available and not enough people to fill them.
Well, I have a confession, Joe. I've been shopping jobs just to keep my finger on the pulse, and there's no shortage of the ones that I see, at least in my for my skill set. There's no shortage of them, and I'm seeing 30, 40, 50 applicants. LinkedIn gives you some of that feedback. I can't make sense of it. It doesn't make sense to me from the jobs perspective. There's so much that doesn't make sense to me, but especially the jobs area. In IT systems engineering type jobs, there's lots of them being posted, but there's no way for me to close the loop. I don't know if any of them are actually being filled or not. Are they just entertaining people? They're not moving forward with them. I wonder.
Well, what's so funny is you bring that up because I always say this: the real jobs, the real ones. Everybody needs cashiers and cart getters and paper or plastic, or do you want fries with that? But the jobs that actually pay money, we're going to talk about that. I'm glad you brought it up. Let's talk about that next. 800-951-0592. Still, we're starting to move a little bit here. Was down almost $1.50. Now down just over $1 here, $22.75. Rolls of quarters and dimes. Cheapest in a couple of years. The cheapest I could see out there, we got rolls of silver quarters. Those are 40 silver quarters. These are all going to be pre-1965 silver quarters at $210 a roll. rolls of silver dimes. That's a $5 face value roll, or 50 dimes at $105 a roll at 800-951-0592. Before I get to Brian's question,
great prices, Joe. By the way, great prices,
yes,
and it's been over a month since we've had any available.
Very much so, and the reason why prices have been so high is because the normal places where we would go to get them don't have any. And so now all of a sudden you got to go to other alternative sources, and hey, I've got them, but the premiums, the amount above spot you had to pay were significantly more. So this is a deal where one of the largest bullion banks, the bullion bank here on the West Coast in San Diego, has them. As soon as he's out of them, that's it. And I don't know when that is, right? We'll buy as many as we need, and then after that, the prices will go up, assuming that this was what it usually is a limited deal. We've done it with Silver Eagles. We've done this before where I'll tell you, hey, a guy walked in. I got cheap silver today. Well, this is one of those deals. A company like mine obviously got sold a lot of bags. They turned around and sold it back to the bullion bank. The bullion bank's got them on sale, so you guys get the savings. That's why they're so inexpensive. But again, I don't know. It may be today only. Maybe it's today and tomorrow, but it won't be very long. But before we get to the other question about Brian and jobs, I want to go back to housing because I want people to understand what is happening. So they brought up a home in Maryland. It hadn't even been started to be built yet. In other words, the lot was there. And they're going to build a 3-bedroom, 2-bath home for $375,000. They had 9 offers. 9 on a home that hadn't even been built yet. Here's the problem. Now, $375,000 is what they consider the median price of a new home. Of course, we know the average price is $450,000, but still, that's inexpensive now. $375,000. To give you an idea of how much more the monthly payment is, in interest rates right now, interest rates today are about 1.8%. $375,000 from 1 year ago. So think about a year ago, the rates were probably like 0.8, something real cheap. The monthly payment is now $200 a month more. Just from 3 weeks ago, the monthly payment on $375,000 has gone up $100 a month, Brian.
Not exactly chicken's feet, especially when things are as tight as they are. And did you happen to see that email that I sent you from the payroll service, where they're allowing you to take an advance on your paycheck?
Yeah, our payroll provider sent out to all of the employees, hey, by the way, we have this thing where you can get paid early, right? Because and again, for a fee, because it's direct deposit. So how it works, and it's brilliant. They take the money from me. Let's just say you guys get paid every other Friday. They actually take the money out of my account. It's either Tuesday night or Wednesday morning. So they already have the money.
They sit on it.
And then they offer, hey, I can give you the money on Wednesday instead of you waiting for Friday. And then they just, hey, for an extra $5. I mean, it's brilliant.
Yeah, but they leave out the detail that, hey, they've already took it from the employer.
Yeah, right. We're not doing it, believe me, they're not doing it out of the kindness of their hearts. They already know, hey, We already have the money from your employer,
so I guess there's things like that to help when there's a extra $100 a month that you got to come up with somewhere. But taking it from your future paycheck, I mean that's wow. If that doesn't
it really doesn't help you in the long run. But just think about this: 3 weeks, $100. Fast forward 3 months. I mean, what are we going to be talking about? These payments, is it going to be $300 more a month? I mean, it's going to get to that point. This is, housing is going to be very interesting in all of this, as far as when do rates get high enough that is going to start forcing home prices to fall, and then when that happens. What do all the investors do? It's going to be interesting. I think it's going to end badly, but hey, what do I know? We'll have to wait and see. We're coming up on the break, so I didn't even get to Brian's question. Are there really a lot of quote-unquote good jobs out there, or is it all just flipping burgers? You want fries with that, and give me a price check on aisle 5. We'll talk about that when we wrap it up for the day.
Yeah, maybe more make-believe.
800-951-0592. It's the big silver sale of the day. Silver quarters and dimes. The quarters at $2.10, and the dimes at $105 a roll at 800-951-0592. By the way, Oklahoma today introducing legislation to try to protect the state's money from inflation, to allow the state to physically buy gold and silver as part of their investments. Right now, Oklahoma says, hey, we're stuck having to buy low-returning bonds. They want to add gold and silver again. And this has been happening all over the place. Texas, Ohio, place like Arizona, no more tax, capital gains tax on gold and silver. And I expect to see a lot more of that as it goes on. But Brian was saying, hey, listen, because Brian, he's, he does a lot for the radio station, but he is way overqualified, right? He's got, he's very talented in that IT profession. And so he said, hey, I'm keeping a pulse on it. What's out there? What's going on? Everybody's claiming that there's all these big money jobs out there and all that stuff. And then you see, these people that apply, and 30, 40, 50 people apply. These companies outside of the low level jobs, and those exist, unless you are the perfect fit, they're just fishing. And they do this all the time. This is a world I used to live in. Believe it. It has to be, hey, if you run the exact same software we have. By the way, you can't be too old, right? We don't want you. Oh, wait, you're 56? 50, no, we don't want you. Right? We want the superstar. Hey, you run our software, you run, the exact same setup we run, and you actually have 5 or 10 years experience, so you're in your early to mid 30s. That's the guy they're looking for. Of course, those guys don't exist, right? The companies that have that, they protect them. The guys and the gals out there that, oh, wait a minute. Well, you have all the experience. But you know what? It was a different software, or it was a different this, or wait a minute. Well, you're too old. And oh, by the way, we don't really want to pay you what you're worth. We're hoping to get this young kid. He thinks he's getting a raise, but it's actually, we're underpaying him for the work type thing. And we see that those jobs are everywhere. And all the big companies do it, and even the small companies. They're looking for that diamond in the rough. But really, the big growth in jobs is, like I said, it's all in the low end. It's all in restaurants, bars, supermarkets, and all of those areas where I think these high-end jobs. It's the same. Matter of fact, I really think we're going to see a lot more of the middle manager layoffs coming in 2022. Companies are getting pressed. McDonald's is a great example. Sales were up at McDonald's. Profits were down. They said, we can't raise prices enough. And so what do these companies end up doing? I'll use the railroads as the example. Well, who can we get rid of? Right? Who can we get rid of? And I just got this feeling there's going to be that, I'll call it that middle management squeeze as these companies continue to struggle with the cost. So it's going to be interesting. I think jobless claims are going to stay elevated. I think we're in for a big slowdown, especially from this 6.9 GDP, inventory GDP. But, hey, we got one more show for the week.